Hi. So now we are starting with revision of death of partner. Same like a retirement only. No much adjustments are there other than the retirement. Like what are the adjustment we have done? Other than that, there are no other adjustment relating to death of partner. Okay. So when the death occurs, what happens? Firm reconstitution takes place because number of partners will get decreased. Okay. So in the event of death, we are going to adjust so many things. Before that, death might occur in the beginning of the year, or at the end of the quarter, or at the end of the half year, or at the end of the year. Okay. Death will not occur in between. Practicality for date is something else. Here it is quarter end, half year end, or a year end. Okay. The best part of death is that if someone is bedridden, the other partners will ask, don't die now, don't die, after the completion of books only you die, so that it will be easier for us to calculate, right? So yeah, what are the things we are going to adjust? Things we are going to adjust is new profit sharing ratio and a gaining ratio, reserves and accumulated profit, adjustment for goodwill we are going to do, revaluation we are going to do, JLP adjustment we are going to do, interim period profit or loss might be there, that also we are going to do, settlement of the final balances to the deceased partner to his executive, offer deceased partners executive. Okay, executor, sorry, not executive, executor. So what do you mean by new profit sharing ratio, sir? After the death of some partner, which ratio the remaining partners are going to share the profit or loss is called as new profit sharing ratio. What is gain ratio? Same. New ratio minus old ratio. New ratio minus old ratio. Because one partner dies, his future profit will be shared by the remaining partners. So how those remaining partners are going to share his future share of profit is called as gaining ratio. Okay. Next one is distribution of reserve, accumulated profit and liability. That is also same like your retirement and admission. The reason is that all the partners until the death of our deceased partner, everyone strived hard towards it. Everyone's profit got blocked in the reserves. Now everyone is entitled for that. So what we will do, we will give credit to all the partners. So the entry will be reserves account debit to all partners capital account in their profit sharing ratio. Next one is revaluation of assets and liabilities. So yes, as all the partners' efforts is there in increasing the liability and increasing the asset and decreasing the liability, and irresponsibility in decreasing the value of asset and increasing the value of liability. So all were entitled for that. So this also will be given revaluation gain or revaluation loss. All the partners will be given share in that. Fine. Next one is what, sir? Next one is adjustment for the goodwill. Adjustment for goodwill is same like your retirement or admission. Basically, gaining partners capital account will get debited for that, and sacrificing partners capital account will get credited for it. Okay. In which ratio the existing partner, that is remaining partners, will compensate to the deceased partner? They will compensate in gaining ratio. Gaining ratio. Next one is adjustment of JLP. Here it's not just like a retirement. Listen carefully. For JLP there is a separate video again. But yeah, in CMA syllabus JLP it's considered as separate unit itself. So we will not touch that for the time being. But always understand, life policy, any life policy, you will get a maturity value only in case of the death. You will get a surrender value only in case of, in other cases. So here this is the case of death. JLP we will get a maturity value. That maturity value shall be shared among all the partners in their profit sharing ratio, because premium is paid out of profit or a income for which all the partners were entitled. So while paying expense all the partner, while coming income only the deceased partner, that is not fair, right? So while paying expense all the partners, while income is coming, income is coming all the partners. Okay. So fine. Next one is adjustment for interim period profit or loss. Here what happens is, as partner might die in between the year, until then we have worked something, no? Until then we have worked something. So what we will do is, till that we will calculate the profit. Till that we will calculate a profit or loss, right? So In which basis you will calculate, sir? In which basis you will calculate? Your book is not yet closed. We can calculate it upon the time basis or a sales basis, depending on what question asked. Depending on the demand of the question, we are going to find out the profit. If it's time basis, time ratio. Sales basis, they will give a gross profit ratio and they will give the sales amount till so far. For that sales amount, we will put a profit percentage and we will find out. Okay, or they will give previous year net profit rate and previous year net profit and previous year net sales. With that, we can find out a previous year's profit ratio, profit percentage. That profit percentage is applied to the current year sales. We will get a current year's profit portion to sum that period. Okay, done. So what we are going to do, if it's a profit, we have to give portion to the deceased partner, no, till, because he worked. So we'll find out his portion of profit. As per the conservatism concept, we cannot expect a profit, right? We cannot expect a profit. So what we will do, we will keep it in some temporary account called P&L suspense account. Okay, so if it's a profit, it is P&L suspense account debit to deceased partners capital account, to deceased partners capital account. Settlements are simple. The balance, whatever is there towards a deceased partner, relating to reserves, relating to goodwill, relating to his capital, relating to his current account, the adjustment of an interim profit, etc., whatever might be there, no, all those things will be transferred to his executor account. All these things will be transferred to his executor account. Okay, later, if you pay your executor immediately, if you pay his executor immediately, if you pay his executor immediately, what happens is, you will just debit him and credit the bank, right? Executor account debit to bank, because when you pay, your balance will get decreased, asset will get decreased. At the same time, executor was your liability, executor is your liability, okay? So his balance will get debited, because his balance is getting decreased, decrease in the liability we have to debit. So that's it. Or else what he will do is, as per the agreement, he will say that after so many years we are going to pay you, boss, which means you are just transferring it to the executor's loan. Of course, you have to pay certain interest as per the question requirement. Okay, you will transfer it to the executor's loan account, and after every year you might pay the installments, or you might pay the interest, and later after some years you might pay the lump sum also, depending upon the question it is. So settlement happens this way. So yes, nothing else, only so much is the death of a partner. So JLP we are going to learn in the next unit. Okay, until then, bye bye.